Good morning, everybody. Hey, welcome to Friday, August 21st. I hope your week has been well. Hey, as we head into the market close for the week, yesterday was an up day, and I'm sure Dave will have a perspective on that. Today, they're fading a little bit. Again, I want to thank everybody for joining us today, and I hope that you'll hang around as we get ready to have a conversation with Dave and kind of figure out where we are and where we might be going from an economic standpoint. So stay with us as we walk through this week.
I'm doing this new just because we play the vintage stuff doesn't mean we don't do the new stuff too every once in a while. Good morning. It's 8:39 here. 21 before 9. Time to check in on your money and other fun stuff that goes on in the world. Let's go check into Statler Financial Services, where Phillip Statler is standing by. Phillip, you were telling me something. We talk about the COVID-19 panic and adjustments that businesses have to make. You were telling me that up in Maine, they're making waitresses wear the cone of shame these days?
Yeah, it is looking that way, Dave. So the Maine governor ordered that restaurant staff have to wear the COVID visors inverted, so they have to wear them like dog cones. So they're small at their neck and they go up over their head, so that they can't breathe on the food that they're bringing out to serve to their people. But I'm looking at pictures, Dave, and it is funny. It is funny. I feel sorry for those people, but it is funny.
Oh yeah, if you've ever had a dog or a cat have to wear the cone of shame in order to prevent them from nibbling at a surgical scar or something, you got an idea what those poor waitresses feel like. That kind of got me, I got to tell you. In the wake of all of the other serious stuff that goes on, I really needed to laugh this morning, so I appreciate it. Setting the table for this morning, yesterday was kind of a nothing day on the blue chips. Dow was up by 47. Standard & Poor's was up by 10. NASDAQ, on the other hand, did set a new record. It was up 118.5 points yesterday, a little over a full percent, and another closing record for the NASDAQ, even in the face of all the weird stuff going on with our trade relationships with China. Will Apple be able to get the new cell phones in? Will Google be able to get us our new toys and everything? But still, we're trading NASDAQ like it's going out of style. A little bit of a down tick this morning, though, and it really wasn't affected by something on our side of the pond. Europe had a negative report, I gather, huh?
They did. They had a negative reading on their PMI, which is the Purchasing Managers Index, and so it was an unexpected miss, and not it was a big miss, but it was a miss after having a couple good months, and so that has weighed heavily on the European markets, which is come across the pond and affected our markets this morning also.
It is a global economy, and Europe is a substantial trading partner for a whole pile of the blue chips that are out there, and that's making the Dow go down more than the other indexes, it being the big ones that have the most international trade risk to make, right?
Yeah, and it is getting they are getting bumped a little bit. They have improved, though. I will say that since I came in here to my computer to start getting ready. But because when I woke up this morning, because I always check the futures when I get up, and the Dow was down $15. And I came in here to my computer to start prepping and getting ready for us talking, and it was down 180 points.
Yeah. Kind of confused me too, because I had the same experience. I tend to check things when I first wake up, go in, and I said, well, this looks like a nothing day on Wall Street. Then I brought up my stock ticker programs about 25 minutes ago and said, holy crud, we're falling like a rock. What gives?
But we are making some improvements now. Now we're down less than $100 on the Dow.
Which almost in today's standards means a relatively quiet day on the Dow, just a little bit of a panic beforehand. Just sidebar stuff that I found in the process of looking stuff up this morning. I found an interesting article. Tesla continues to grow. They may not be able to sell more than a handful of cars a month, but boy, the stock market loves them lately, doesn't it?
Yeah, they do. And if a lot of people look at Tesla as a car company. But in reality, if you really dig into Tesla, they're a battery company. They've gotten into solar, and putting together batteries for solar power to be stored in. So they're more than just a car company, Dave.
And that was the kind of the point I wanted to bring up. I know their battery technology is considered world class, and some of that technology advantage is transferred over into Musk's other enterprise in SpaceX. So it's a glamour stock that really is going to end up being bought more by its glamour than by its necessary financial results, right?
I think so, at least at this point.
The idea that its value, the idea that its company value on the stock market is more than Ford and rivaling GM kind of makes you sit back and go, huh, though, doesn't it?
Yeah, it really does. Hey, another headline I saw was, we've talked a lot about retailers and how they've struggled and how a lot of them have rushed into bankruptcy for protection. And there's some fear out there in the retail sector that this second wave of coronavirus may linger longer than they really want it to and expect it to. So that's weighing down some of our retail friends today.
Oh, yeah, and the thing is, we're not known for having much of an attention span in this country. We tolerated that 130-day lockdown, but even out in California, where they've got the progressive dogma down to almost a science, folks are really resistive to going back home, wearing masks, and all of the stuff we see on Facebook. It's going to be harder to control the second wave than it was the first wave, and the first wave was no piece of cake.
Exactly. You're so right there. We are, as Americans, fed up with this stuff, and we're very impatient people, and we don't sit still very well.
And that ain't a good thing to have happen in our body politic when we're trying to fight a bug. So I'm not. I'm a little trepidatious about the second wave when and if it starts.
Yeah, I am too. And so hopefully they come out with a vaccine that we can get through and will work, and we can get our lives back to some semblance of normal.
Absolutely. It is earnings season going on, and for all of the negative pressure that's on the Dow and the S&P this morning, at the very least we know that John Deere can still sell tractors, can't they?
Yes, sir. Tractors, construction equipment. They had a really good quarter, Dave. They beat by about 100%. So they were expected to earn about $1.26. They came in at $2.57. Revenue came in above forecast. And here's the deal. They raised their full year outlook. Which not many companies are doing that, right? They said there's still some uncertainties out there with the COVID-19 stuff on their business, but they're seeing some light at the end of their tunnel. They're up. They were up more than this. They're up 3.3% right now, and they will open, Dave, at a new 52-week high right now.
That's amazing, given the fact that, we see things like that purchasing manager index out of Europe and the trade issues with China and all of that. Deere is still going on. That was one of the ones that I watched, and I saw it at the top of my winner list this morning. I hadn't seen the results, but it had to be good news.
Yeah, they did do well. The other one I have is Foot Locker. Foot Locker did well too. They beat by about 20, not quite 20 cents a share. Revenue came in above forecast. Their same-store sales were up 18% for the quarter. And this is a big deal here. They reinstated their quarterly dividend. That's a good sign for Foot Locker. So they've done well, and they are trading up almost 6% this morning.
That's good to hear as well. It's been an interesting week in terms of the news, in terms of the earnings season, and since we're coming to the end of it now, have you seen any pieces giving us kind of an overall picture on earnings season? Because it's been one of those ups and downs things where I really don't have an overall picture in my mind how well it's gone. I've kind of gotten the feeling that by and large we got faith in management. They've been managing around it and whatnot, and things haven't been as bad for companies as expected. But, surprises like Deere with growth, actual growth year over year is kind of a surprise anyway.
Yeah, it has been. I haven't really seen anything, but my My gut is it's really been mixed, right? So I have two more for you.
Oh,
In the retail sector, because this is just blowing me away. I mean, Foot Locker doing well for the quarter. Then we had Buckle. So Buckle had a great quarter. They earned 71 cents a share. They're only expected to earn about six cents. I mean, 71 cents a share, and they were only expected to make 6 cents a share. So revenue beat forecast. So they were hurt because of store closures. But I think the retail stores that are being successful have been able to make that switch to online and to be able to really beef up their online sales. Buckle is up a little over 16% this morning.
wowzers! You
Yeah.
said you had. You said you had
Got one more, and this one is a favorite for a lot of folks out there. Ross, the Ross store line. You know, they saw a 33% drop in sales, which we kind of expected because of store closures. They did see a pickup, though, in the quarter when they first opened stores back up. But they, like TJ Maxx and Marshalls and those stores, they're having some supply chain issues because their inventory is getting depleted and they're not being able to fill the stores back up.
There was a bunch of chatter on Facebook locally wondering whether a couple of those off-price stores down at the Crossing were in trouble and going to close. And basically, I threw in on one of them saying, yeah, they're having supply chain. Remember, they take surplus from the other chains. That's where they get their stock. The other chains are closed. They got nothing to sell.
Yeah, and so that's the problem they're having. I mean, Ross is up about 0.4% this morning, but it is going to be interesting to see how fast they can get inventory back into their stores. I think it's going to be an issue of, especially these bankrupt stores, as they start to close down. I would think that would trickle down to the Marshalls and the Rosses and help them out. But who knows how long it's going to take for that to get accomplished.
Yeah, as the transfer takes place, all these bankruptcies is probably a positive for the off-price lines like that because that's where they get their stock. But short term, as they haven't been able to open up stores, these stores don't get the surplus, so consequently, yada, yada, right?
Yeah, exactly.
Understood.
Exactly.
Resetting the table for the morning. It was an up day yesterday on Wall Street. The news, of course, in NASDAQ with a new record. Everybody else was up, just not as much. 45 minutes before we open this morning, have the blue chips recovered more from the European shock, Phillip?
Yeah, they're about the same spot they were when we first started, or well, just from a minute ago. So here's the deal. There's not a green thing on my screen. It is all red. Commodities, stock market, all of it. So we've got the Dow down about 0.3. The S&P 500 is down a little over 0.3. NASDAQ's about the best. It's down a little over 0.1%. Switching gears to the commodities side, we've got silver down 1.5%, and we've got gold down 0.33%. And then crude oil, it's down from where you and I spoke yesterday. It's down 1% from where it closed. It's at $42.40 a barrel right now.
Corn's up.
You found something, huh?
Now, of course, it's kind of pretty much at the bottom to begin with because they're having problems up there, too. But the price of corn is up, so there's one green thing. Overseas markets, the Asian Rim markets, generally up overnight, but they closed before that European news came out, so they're still green. Europe is, as Phillip said, pretty much in the red this morning. Germany's down by over a full percent midway through their day. Phillip, stability counts for a lot, and while I know you aren't in the office a lot for the next couple of weeks, you can still get an appointment. How do I find you in order to set that appointment and stay in touch?
Hey, they can give us a call at 863-382-0037. They can check out our website, statlerfinancial.com. Hey, if you got time at 11:30 today, we're doing Friday with Phillip. You can go to our website, go to under the events tab, and you can register right there for that event. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty. Phillip, you have a great break. We're going to miss you for a couple of days in here, and I will look forward to seeing you when you get back, all right?
All right, buddy. Thanks. I appreciate it.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, as Dave said, I will be out of place for a little while. Going to take a little downtime for a week or so here. And hey, I'll check in periodically and give you a little update here and there on Facebook. And hey, I'll be back in the office after Labor Day. Now's a great time with what's happening. The market's going up. It's a great time for our financial x-ray. Give us a call. Get on my schedule for when I get back, 863-382-0037. Have a great day. I look forward to speaking to you guys real soon.